What is meant by the term leverage? How are operating leverage, financial leverage, and total leverage related to the income statement? Leverage is the use of debt or borrowed capital in order to undertake an investment or project. When one refers to a company, property, or investment as highly leveraged, it means that item has more debt than equity. The concept of leverage is used by both investors and companies, whereas operating leverage is concerned with the relationship between sales and operating profits. Financial leverage is concerned with the relationship between profits and earning per share. Total leverage is therefore concerned with the relationship between sales and earning per share. What is the operating break-even point? How do changes in fixed operating cost, the sale price per unit, and the variable operating cost per unit affect it? Break-even quantity of sales, or just simply break-even point, indicates a number of units of a company's product that is produced and sold, at which point the company's net income becomes zero. When the firm has fixed costs, the percentage change in profits due to changes in sales. What is operating leverage? What causes it? How is the degree of operating leverage measured? Operating leverage is a measure of how revenue growth translates into growth in operating income. It is a measure of leverage and of how risky or volatile a company's operating income is. Operating leverage occurs when a company has fixed costs that must be met regardless of sales volume. When the firm has fixed costs, the percentage change in profits due to change in sales volume is greater than the percentage change in sales. The degree of operating leverage can also be calculated by subtracting the variable cost of sales and dividing that number by sales minus variable costs and fixed costs. What is financial leverage? What causes it? How is the degree of financial leverage measured? In finance, leverage is any technique involving using debt rather than fresh equity in the purchase of an asset, with the expectation that the after-tax profit to equity holders from that transaction. An increase in the value of the asset will result in a large gain on the owner's cash. When the loan interest rate is less than the rate of increase in the asset's value, a decrease in the value of the assets will result in a larger loss on the owner's cash. The degree of financial leverage measures the percentage change in EPS for a unit change in operating income, also known as earning before interest and taxes. This ratio indicates that the higher the degree of financial leverage, the more volatile earnings will be.